Hi everyone, you're watching Market Fatafat on ET now. Nice recovery being witnessed in the Nifty and the Sensex as we speak. We have the AMFI data that has been released. And despite the weakness we're seeing in the markets, well, not so much so in February, but more so in March, equity inflows have actually improved in Feb. Third straight month of a rise. Small and large cap category, in fact, saw 40% rise. Interestingly, the ELSS category, however, saw a dip in inflows. Let's bring on board Mr. N.S. Venkatesh to talk about these numbers and more. Thank you for joining in. Sir, equity inflows more than 10,000 crore rupees for the first time, I think, since March 2019. This despite the market going down. So what do you think are the factors behind this shift in investor behavior?
I personally believe that one, after the budget, they also saw the valuations being a little bit lower. So they thought that this is the right time to re-enter the equity market. So they have tried to come through the mutual fund market into the equity side. That has prompted the flows of over 10,000 crore into the market. Though the last week of February, the volatility in the stock markets have happened because of the coronavirus and all those things, which has continued in March as well.
We've seen renewed investor interest in the broader markets. It continues in the last month as well. Do you think this is the right time to perhaps increase exposure in small caps and mid caps?
I believe so. I believe that essentially the correction that has happened in the small and mid caps has been very large earlier itself. And now with whatever has happened in the markets, I think further corrections have happened. So to that much extent, this could be a right price level for them to look at it. But they definitely need to look at the value investing. So towards value investing, maybe they need to look at the right stocks if they are entering on their own into the stock market. Otherwise, it is better that they give their funds to the mutual funds and mutual fund managers who have a long history of investing based on value investing will then take the right choices.
Many mutual funds have exposure, of course, to Yes Bank as well. The debt had to be written down over there. How is the industry essentially planning to recover that amount? What sort of steps are being taken as well proactively to ensure that to avoid such investments in the future?
No, essentially, if you look at the AT1 instrument, the nature of the AT1 instrument is that it has to bear that risk of unabsorbed losses when let us say a restructuring or a liquidation happens. In this case, Yes Bank, they are restructuring it. So to that much extent, whatever is unabsorbed losses, some part of it will have to be borne by the AT1 if it is required. Our view as an industry is that first, the unabsorbed losses has to be absorbed against the equity of Yes Bank. Then if any preference shares are there against that preference shares, and then only it should come into the AT1 sort of an instrument, AT1 or a tier 2 instrument for that matter. So in AT1 also there is a sort of a way in which either you do a permanent write down or a temporary write down. So our view is that you should look at temporary write down rather than permanent write down. So as an industry body, we have given our views to RBI and also copied it to SEBI.
This is the second month in a row where the market has seen a sharp sell-off. What are you gathering in terms of feedback on ground from investors? Is their confidence being shaken? And how do you suggest investors essentially combat such market turbulence?
I would say that one, definitely the market fall because of the coronavirus was not expected at all, in the sense that it's a black swan event which has come and hit the markets, and that is where globally the markets have fallen, and India was not an exception to that. So to that much extent, it was not a fundamental problem relating to India. It was a global problem coming and hitting the Indian stock markets as well. But the corrections which have happened will help maybe people with the right risk appetite to re-enter. So they should look at it. And when you are investing in mutual funds through goal-based investments, you should continue to remain invested and not panic, so that you are investing for your goals. And when you are investing when markets are low, you are getting a larger number of units. So to that much extent, it will help them. So that is where I think maybe people should not panic. People should continue to remain invested based on their goals through the mutual fund route.
Okay, thanks so much, Mr. Venkatesh, then, for joining us to talk about the AMFI data. Meantime, let's take a look at the stock price of Yes Bank. Another day of a rally coming by in this stock on the NSE as well as the BSE. Stock price has surged almost about 30% at 27.4. Second straight day, like I mentioned, of a rally. We're seeing a lot of volatility in the stock price come in. That's Yes Bank for you. And plus, you know, now that SBI has, of course, instilled confidence of sorts, or rather, since SBI has come in, it's instilling confidence in other investors as well. Now, various reports are talking about other PE players as well coming on board with their funds. So that may as well be stoking a bit of a rally. But Yes Bank CEO and founder Rana Kapoor was arrested, of course, by the ED last week, as you know, and now he'll be presented at the PMLA court for an extension. The ED is also applying for a custody extension. We have Rahul Kumar, who will be tracking the entire case, and he's joining us right now on the phone line. Rahul.
Founder of Yes Bank is likely to come in special PMLA court today. Now, what had happened on Sunday, he was arrested by Investigative Agency Enforcement Directorate, and on Sunday he was brought in the ED court, where he was granted custody to ED till 11th March. Now, this custody is ending today, and Rana Kapoor is likely to be brought after the lunch break. Now, what had happened, once Enforcement Directorate has arrested Rana Kapoor, a FIR was also filed by Central Bureau of Investigation against Rana Kapoor and his three daughters, that is Roshni, Radha and Rakhi Kapoor. Now, what had happened, ED in its initial inquiry has found that Rana Kapoor backed Yes Bank has invested around 3,700 crore in the short-term debentures of DHFL, and what had happened that after investing this much amount, he has received some kind of 600 crore as kickbacks. Not only this, the CBI has also filed that Rana Kapoor backed Yes Bank has sanctioned a loan of rupees 750 crore to RKW Developers, which is DHFL group companies, for the projects in Mumbai. Now, this was the initial finding which has been found by the enforcement director. So it will be very interesting to watch what exactly comes out in the 3-day investigation and what exactly enforcement directorate is filed in its remand copy. So we will update you with each and every moment from PMLA court, and Rana Kapoor is likely to be brought after lunch hours.
Well, market veteran Madhu Kela advises that investors should stay calm during extreme volatility and use it as an opportunity to systematically buy on dips. Listen into an excerpt of his conversation with ET Now's managing editor, Nikunj Dalmia.
This is the time to maintain calm and think peacefully about investing, whether you are already an investor or you are thinking of allocating more equity, more capital, more allocation to equity. That is point number one. Point number two, I would say that this is a time when you have to use your past experiences as to, whenever market faced a situation like this, what happens 6 months, 12 months, 18 months, 24 months down the line is, we have always seen markets invariably repeat what has happened in the past. So, first point is that this is the volatility which is not to be seen in many, many years. At least I have not seen this kind of volatility for many years. When markets are locked down in a country like America, 7%, and then next day they go up 5%. Forget retail investor. I am sure even institutional investors are getting very jittery about this kind of volatility. So my advice to all your viewers is maintain calm. If you are not an investor in equity, there could not be a better entry point. However, just make sure that you keep in mind that these markets are likely to remain volatile. The coronavirus situation, many people are arguing till the time it sets in, the temperature become warmer in these countries where the spread is happening, it may be possible that the situation may become even worse than what it is today over the next 25-30 days. But we have to use this volatility in this market. We have to use this volatility over this time frame to systematically invest. So I would argue that this is not the time to panic and just think of selling, but this is the time to systematically accumulate, provided you have the stomach to digest the volatility, and if you are a long-term investor.
Madhu, I know you are a big foodie, so I will talk in food terminology. If you eat a pizza, you get instant gratification. If you cook a dal makhani, you have to labor it out, but after some time the rewards are beneficial. So do you think this is time to start cooking the dal makhani and not chase the pizza for quick money?
I agree with you, Nikunj. This is a very brilliant analogy. This is not the time for pizza. This is not the time for looking at instant gratification, but it is a time wherein you will, you will have to cook it properly, you will have to digest it properly, and eat it over a period of time.
Okay. Madhu, we don't know the medical news. China is saying the virus is getting contained. Italy is saying the virus is spreading. So we don't know. So let's not get into what we don't know. But what we know that historically when markets have corrected like this, they always tend to bottom out in terms of the P multiple. So in terms of your analysis and your observation, fundamentally how far are we away from a bottom?
So that's what I'm trying to say, Nikunj. In this kind of markets, it's very, very tough to call that this is the bottom, or bottom is 5% lower, or we have already seen the bottom, or bottom is 10% lower. That I don't think anyone can predict. And this kind of markets where ETFs are predominant players and not the people who are rationally thinking about stocks. So an ETF decides that I want to sell $1 billion. They don't look at the prices. They just want an exit. And that is, I think, what we have seen the behavior of the market in the last 5-7 days, worldwide as well as in India. It is clearly driven by that kind of a selling. So in these markets, to even try to predict that we are in the bottom or we are near to bottom will not yield results. What will definitely yield results is, let's say, now look at India specific. What is happening in the world is, so India specific, the coronavirus impact is very, very limited, and I will go to an extent of saying maybe it is our diet, maybe it is our resistance, or maybe it is our temperature. Otherwise, it is very, very hard to believe that we have 130 crore people, and for whatever reason, under God's grace, the virus is not affected India as much as it has affected worldwide. So let us say that is a base case. If that is a base case, then whatever is happening internationally, and I want to spend 2 minutes here, this the fall in oil prices is not a small thing. And I would say that, the fall should not, it will not be knee-jerk. So I don't expect that, even tomorrow, let's say if OPEC comes up and says that we have some kind of an arrangement, I don't expect the prices to go up again from $35 to $70, because you have had a slowdown in the global GDP, because you have had an impact in the oil demand. So oil prices are likely to remain here at least in the near future of next 6-9 months. I would not say it is $35, but certainly not going to $70. So that brings in a lot of good news for India. It helps the first fiscal situation of the government. Also, it helps a lot of sectors, and third, Nikunj, again the most important thing, we've been talking about this earning growth coming in for last 7-8 years. In the beginning of year, every analyst, every fund manager is expecting that this year we are going to see a 20% earning growth. And by the time we end the year, we end up with 3%, 5%. I think because we will have a lower base in 2020, lot of upfronting in banks in terms of provision is being made, and then you have the impact of lower crude oil prices. So next year, actually earnings will positively will have the potential to positively surprise the market. And when we have seen, whenever the earning will come, markets will have to respect it. So I am fairly optimistic that you will see in 2021 a decent earning growth, which we have not seen in last so many years.
Madhu, I had Prashant Jain of HDFC Mutual Fund last week, and he is of the view that with each crisis, the market leadership changes, which is that in 2000 when market corrected, infrastructure made a comeback. When infrastructure stocks corrected, consumer stocks made a comeback. Do you think with this crisis, the leadership in the market will also change? Because this is a point you've been making again and again every time we've met, which is get out of quality. Do you see it happening now finally?
It is very much possible, Nikunj, because in this kind of environment, it will really need guts for someone to hold a stock at 60-70 PE multiple, specifically if I don't see a 10-15% earning growth also in these companies. So it is very much possible that the new players, specifically deep value stocks, may make comeback in this market. It's very possible. Because let's not forget that people have forgotten spellings of a lot of these companies, and these are companies which are available at 3, 4, 5 P multiple. The ownership levels have diminished meaningfully. So if you look at any of these deep value companies, there's hardly any institutional investor left in a lot of these companies. So whenever if the fashion changes, or if the fashion comes in their favor, it will need very small buying for these stocks to rise meaningfully.
Madhu, the way how government has smartly handled the Yes Bank saga, do you think markets are not appreciating, and given the global turmoil, this good work is getting lost?
Now, I don't think, Nikunj, it will get lost. Markets definitely are aware that the government has done a brilliant job of handling this crisis, that we have never seen a response like this, which came in so quickly after they diagnosed that this needs to be sorted out. But what is happening globally, you can't say that our markets will be unaffected if Dow is hitting a lower circuit. So I think it's a matter of time before market will recognize that the government has done a good job in handling this crisis.
So Madhu, I'm breaking the market into 3 parts. One, sentiment, which according to you right now is completely bearish. We've got capitulated, and historically, according to your analysis, when sentiment becomes that bad, it's time to buy. Let's focus on the second aspect, which is liquidity, Madhu. We are still dependent on global flows. One day of FI selling, and look what happened on Monday. 1 week of FI selling, and look at what's happened to market in last 1 week. Given that there is pressure at global level because the Dow has come down, machine-based programming has taken over, what happens if $3, $4, $5 billion gets out from India via the FI route?
Which is why that's the precise point I'm making, Nikunj. That is very hard to predict, and what you are saying, it is very likely that some more foreign selling can come in, and which is the point which I am saying, that whatever amount of money which you need to invest, you don't possibly need to do it in one day. You stagger it over a period of, let's say, whatever time which you want to choose. You stagger it over a period of time and do systematic investment, rather than saying that this is the time, this is the bottom of the market, and I would buy everything which I need to buy tomorrow morning.
If you recollect, let's say 2000, when US market peaked out, particularly NASDAQ peaked out, that was a very technology-centric event. So there was a euphoria happened only in the technology stock or NASDAQ. There were no signs in Dow or S&P in any manner. Okay, something similar. It is a very event-driven panic which has suddenly triggered. Okay, which market was not prepared. The background is that there was extraordinary complacency in the market, liquidity indicator high, risk appetite high. That's the reason you are seeing a bigger impact. If you compare Lehman impact, right from October 2007, market has started correcting. So market has already corrected more than 25% by the time Lehman happened in US. Okay, so that's the time people were not that level of complacency, and that's the reason the fall was happened, and then you have seen a rebound. This was like a shock. Okay, so it is sudden, which has happened. I think given the liquidity and the central bank working together will come back, but given the background, we believe this is a phase which can last for long. So I'm talking about not from the market correction point of view. As a strategy, we call it vol expansion phase, so volatility expansion phase. In this phase, your traditional styles or approaches will not work. Okay?
So how can one make money in this kind of a market?
So you have to be very agile in this environment. If you're getting opportunity, you should learn to book profits also.
Give me an example. What should one do right now?
So if you ask me from the immediate basis, I think it's opportunity to rebuild your exposure in next 3, 4, 5, 6 trading sessions, okay? With a clear intention that part of these holdings, whenever market gives you a sharp rebound down the line or 2 or 3 months, okay? So I think I will go for stock specific thing rather than just buying the market as a whole, okay? So pharma as a sector looks good to me, utilities as a sector looks good to me, okay? These are the 2 themes which comes out with a lot of certainty and clarity.
Why
and
would
then
you
some
buy
of
utilities?
the consumption names also.
Why would you buy utilities?
See what happens if you, I look at a more from macro background. When global markets have peaked out, which was our call in the 2020, we'll remember for the tougher global market, particularly DM and in US, okay? Some of the market has already peaked out in 2018, between 2018-19 also. So this is the when global market peaks or the money move toward the less risky assets, okay? And utility fits that bill irrespective of the market condition. Their earnings will not going to impact up to that extent. So it's a global phenomena which we have seen, okay? People will move toward defensive name. So pharma also qualifies. So pharma utility qualifies in that.